Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest, and that's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. It's great to be here.
All right, so we're talking Netflix. It's a big report after the close today, ahead of a long weekend. You know, stocks outperformed, Landon. It's not surprising, right? They smashed subscriber growth last quarter, almost 19 million, probably based on the fact that they started showing some live sports on Christmas. But at the same time, Landon, it seems like people are using this as a safety play as far as, a stock to look at right now, just due to the fact that, hey, nobody's giving up their subscriptions to Netflix anytime soon, are they?
Right. I mean, I never thought I would describe Netflix as sort of a defensive stock.
Right.
It's always been a growth stock, but if the threat is tariffs, then yeah, this is a defensive stock, and that's how the market's been playing it incredibly. It's such an interesting dynamic. I didn't see it coming, but yeah, the stock has done really well, up 40% over the last 6 months, up year to date. Just crushing the S&P and all the other companies because of that. I guess that factor there that they're immune. And yeah, they did really well last quarter, almost 19 million new subscribers as opposed to the 10 that were expected. I think a lot of that, like you said, had to do with the NFL doubleheader on Christmas, also the Tyson-Paul fight, brought a lot of people in. The downside, I think, to that, though, is, and we'll also talk about, they're bringing in WWE on Mondays. They're getting into sports. Those two sort of one-offs, the Tyson fight and the NFL doubleheader, they didn't really show us the stickiness and interest that we thought we would see. We can actually, when you look at people, visiting Netflix, it was just, they jumped in and because of those two, but the overall traction from the consumer is actually negative on a year-over-year basis, which is it's concerning given all of the stuff that's going on this week. They're talking about getting to a $1 trillion market cap and really raising those expectations. We're seeing web visits are at 3-year lows right now with the 10% drop on a year-over-year basis. And actually, when you look at what people are searching for, we've got some specific search terms that we like to look at. People talking about canceling Netflix is up 38% on a year-over-year basis, which is really high. But you also have to think a lot of new people came in, so maybe they're thinking about, okay, I watched the fight, I watched the games, now how do I get out of this monthly subscription? So these stats are a little bit concerning to us. Obviously, the cancel Netflix speaks for itself. The Netflix with ads search, that can be seen as a negative as well because, instead of paying the full price, you're interested in paying with, getting the ads, the lower tier version, which, maybe is a little bit less revenue. People looking to log in. Again, these are search terms and these aren't the specific search terms. These are bucketed search terms, but people looking to log in down a little bit, and then people just interested in the plans, which is obviously a purchase intent trigger for signing up, is down significantly year over year. So the data that we've got is actually fairly negative on Netflix, which is it's hard for me to say because I'm an investor and this is a long-term winner. This is a great company, but this quarter is not looking great. And you can actually see here the fight and the NFL doubleheader had major spikes in web visits, but then it kind of reverted back to the mean and actually is down on a year-over-year basis. So I don't know that those were as sticky as a lot of investors are hoping that they were. So that's a little bit concerning. I will say that, everything is kind of shaping up to be a disappointing earnings report because you've got the tariff play as a defensive measure, but that's already in. So hypothetically, if, this isn't going to happen today on earnings, but over the next, little bit, if tariffs become an ease of concern, you got to remember this is a, supply and demand. This is a free market that we're working with. So think about that in terms of the investor dollar. Where are they putting that dollar? If people put it into Netflix because they're worried about all the tariff potential, that's the defensive play. Well, if that worry goes away, then all the companies that got crushed by the tariff fears are now attractive. So you'd pull it out of where you put it defensively and pull it out of Netflix and put it into those. The data that we've got is obviously weak. I talked about a lot of the shows just aren't drawing the views that they've been drawing in the past. Like their content is a little bit weaker. I mean, we look at their top show right now is Adolescence, and it's being outperformed by White Lotus, which is HBO, Severance, which is Apple TV, Landman, which is Paramount. So even their content is a little bit weaker. Now they just dropped Black Mirror, which they may talk about in guidance, but it dropped after the quarter, so that won't be reflected in this quarter. So we'll see. That's always done well in the past, so hopefully that can pick things up for them. But then also, I think expectations are just really high. The stock's done well. You know, they had that announcement about being a little bit more aggressive with the stock and getting the market cap up, and I think that's pushed things higher. So everything from my perspective, and again, I'm a bit of a contrarian, but from my perspective, it's setting up to be a potential disappointment this quarter. And so I'm a little bit worried going into this overnight play here, actually over weekend play, since the markets are closed tomorrow. If you're playing this, you hold all the way through Monday. But that's kind of where I see it right now. Kevin, I'd love to hear what you're thinking.
Well, Landon, I'll add one more problem to this story, and that is the comps from last year are going to be tough to beat and actually show a little slowing. But Landon, I wish I knew you in college, because if you're a Netflix executive, you just gave them the answers to the quiz, and the answer is more Tyson Paul, more live sports. The Brady roast was also a very highly watched one. You're giving them the answers. You know what? These numbers are coming down because they went so high on this live sports and live events. Your data is giving Netflix the answers to its problems, which is they need to be investing more in live sports and live events that everyone watches. So, though this data looks complicated and worrisome, I think it actually gives them the answers to their problems, which is more of that's making those interests spike like this, Landon. But the comps are going to be tricky. This is going to be a tricky quarter for Netflix before it released after expiration and all the problems with a Thursday expiration, Landon. So I'd like to know what you think about this is the answer to their problem.
Right. They've got the blueprint. I mean, if you look at, all those the change in search terms, people are looking to cancel. They're looking less to sign up because the base period is so much higher, because they signed up to see the fight. They signed up to see the roast. They signed up to see, the NFL doubleheader. And so if you just give them that on a regular basis, they won't be searching how to cancel. They'll just keep their membership. So yeah, I think that's really key. It's a great insight, and it maybe they've figured it out, right? I mean, they're smart. They've got this data, or they've got something like it, and maybe they're just saying, all right, you know what? We need to have more live sports, more of these fights, more of all these live events, and less on the created content, because they're falling behind a little bit on the created content. And I don't know what it costs to get licensing for fights in NFL. I'm sure it's not cheap, but it's also a lot easier to do effort-wise than create an entire show, create an entire movie. Writing a check and giving it to NFL or giving it to the distribution center for the fights is easier effort-wise. So maybe it's cheaper. I don't know. But it's certainly something that is sustainable. There's always a new sporting event. There's always another fight. You don't have to continue to create these series and the next season. So I'm not saying get away from that by any means, but I'm saying add it to your repertoire and get to the point where they've got this whole new demographic of viewers who want this kind of content. It clearly showed that that's the type of content that is going to bring them in, but that they're also willing to hop in and hop out if you don't keep giving them that. So they're canceling now. They hopped in, they beat expectations on subscriptions by 80-90% because of that kind of content, and now they're hopping out because you're not giving them any more. So you got to keep coming up with stuff, and the summer is always going to be tough because there's not as much sporting. Baseball is not as interesting for most people as basketball basketball and football, but you got to have something. You got to have those fights coming in or something. So hopefully they'll talk about that. And if they do, maybe I'll be wrong, and maybe this is a good reaction to the earnings report. But right now, I think expectations are just too high, and I think the comps are too high, and all the data is just kind of leaning away from sustaining those very high levels and more showing that they're regressing back to what they were before those spikes of interest.
Yeah, perfect timing to not give any subscriber numbers moving forward, because the company's pulling back on that as they notified. So the comps aren't going to be there. It seems like your data is a little sour for this quarter. One caveat I'll throw out there, Landon, before you give me your earnings score on this is the stock's just under $1,000 a share. It's not in the Dow, right? Can't get in there with that type of price. What if they do their first stock split in 10 years? Is that, I mean, we all see what happens historically when you announce something like that. Everybody wants to get in before the stock split. Is that something that you guys are looking at?
Yeah, I mean, we don't have any data on that. It's anecdotal, like you guys know. I mean, yeah, I think that could be the winning move that beats the LikeFolio score, right? That might do it. I mean, if they go 10 for 1 or something, and now the stock's at $95 or whatever. Yeah, it might push over 100, and there you go. That's very possible. It's wild to look into the psychological mindset of an investor that they'd rather own 10 of something at a tenth the price rather than just own the thing. But I get it. I mean, it's just been a historical phenomenon in the market. So maybe that's kind of what they were alluding to when they talked about that, increasing the market cap plays on the, stock split. So very possible that happens. And if so, if that's what beats us, that's what beats us. I will tell you, though, that, other than that, our data is strong on the negative side. So we've got a negative 49 going into this report, which is, pretty strong. We don't get many in the 60s and 70s, so around negative 50 is pretty strong. We're willing to take a bearish bet on it. And like I said, if something like that beats us, fine. But I will also say that long term, this is a company to own. We love it. So, if they do sell off on, inability to keep up with comps, it could be a good buying opportunity to the future. The only thing I worry about, again, is the non-defensive rotation out of that tariff play, right? So if all of a sudden tariffs become a non-issue, then you get your money out of Netflix, take your profits, and put it in some of these companies that have gotten hammered. So that's the only shorter-term thing that I've got over the next, 3 to 6 months that might hurt Netflix, besides this earnings report.
All right, great discussion, great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down Netflix. Kevin, I don't think I've ever heard them have negative data on Netflix, but those cancellations, I get it. They don't have live sports